Despite strong listings for residential auctions last weekend, clearance rates were down in the major markets of Sydney and Melbourne. It's all consistent with an overall downward move for house prices across the nation in the last quarter. Opinion, as ever with this prickly issue, remains divided between those who say the bubble is bursting and those who think housing is in for a soft landing. Emily Stewart reports.
It's a buyer's market, with house prices starting to cool off.
The numbers of sales have reduced across the nation by, on average, 25%, but listings have continued to increase.
We seem to have a lot of hesitancy in the marketplace.
Buyers just taking a little bit more extra time to make up their minds on what they want to do and what they're paying for a property.
1.275, fairly bid now.
Clearance rates in the two major auction markets, Melbourne and Sydney, remain down on this time last year.
Yes, no.
Preliminary figures from RP data show there were more than 1,000 properties up for auction in Melbourne last weekend, but only 60% sold. That's down from around 80% this time last year. And in Sydney, around 800 properties were auctioned with a clearance rate of 65%. David Airy, the president of the Real Estate Institute of Australia, says the slowdown began in Perth in 2009.
Prices have certainly softened in every mainland capital city and Tasmania as well, through more noticeably over the last 6 months, but in particular the trend has been over 12 to 18 months.
Andrew Harvey from the Housing Industry Association says a spike in prices in the major markets last year was caused by the federal government stimulus package for first home buyers. He agrees that demand is now softening and that it's mostly down to recent interest rate rises.
These corrections we're seeing in the housing market are entirely appropriate. They're what you'd expect after those interest rate increases, and also they're basically what the RBA would be after, to be slowing the demand a little.
And as for claims that a housing shortage exists in Australia, David Airy says the opposite is in fact the case, and there is a significant oversupply of houses in the market.
I don't think there's been a bubble, and I don't think there's any bubble to burst. The indicators are that this has been a very slow softening, but with the huge increase in the numbers of established homes for sale, followed or added to properties off the plan sales continuing to rise, we've just seen a lot of stock which isn't moving.
The general consensus now is that lower prices will kick in for the next 12 to 15 months, and even the optimists are forecasting some lean times ahead for property investors.
This is about the end of the correction, but we're not going to see any increase in prices. They're going to be very flat over the next 12 months.
So those buyers who thought the capital cities were out of their reach may soon have an opportunity to buy at lower prices.